Hello everyone, this is Paul from the APNacademy, and today's topic is pullback trading. We're going to be looking at what are pullbacks. We're going to be looking at how to know a pullback has ended, and also we're going to finally be looking at how can one trade pullbacks. How do we trade the pullbacks? So without wasting time, let's just kick into the video. But before I kick there, I would like to bring to your attention how we normally operate if this is your first time coming across any of our videos. We usually first start with the theory part, whereby I explain to you exactly what we're going to be encountering when we go to the charts, so that you do not get lost when we're there. Right? So we start with theory. I make you understand before we go to the charts. So stick around until when we go to the practical bit, because trading is not theory. And also, if you've just come across our videos, make sure you hit the subscribe button. And if you find the video useful to you, just click that likes button so that many people can come across it. So let's continue. Now, what is a pullback? Now, a pullback is simply when a price is correcting, or when a price is doing what most people call retracing. I'll give you an example. Price does not move in a straight line. Do not expect price to move in a straight line. Let's say if the price of, let's say, Euro USD or a synthetic index like volatility 75 is moving up, it's not going to just move up like this. It has to move up while doing breathers. Now, these breathers are what we're calling pullbacks, right? Now, today's topic or today's video is about how can you capitalize on this pullback here, right? Or if the price is of something is going down of any security, or either volatility 75 or a currency pair like Euro USD, GBP USD, or even a stock like Apple, Tesla, if it is going down, for example, it's not going to just run down at once like this. It's going to move while giving breathers, right? While giving breathers. That's why we said in most of our previous videos that price moves while making higher highs and higher lows if it's going up, and also it moves while making lower lows and lower highs while moving down. Now, these are breathers that we're looking at today. How do we capitalize on this? How do we benefit from it? Now, before we continue, I would like to make this note very clear. You have to choose, right? If you're in an uptrend and the market makes that high, makes this low here, and makes that high, this is the pullback we're talking about. You have to make a decision. Am I trading from either up here to down here? Am I trading this actual pullback, or I'm waiting for the pullback to end? Now, the focus on this video and what I will normally advise whoever I meet or whoever I'll be discussing with such a topic on pullbacks, I do advise that you wait for the pullback to end and then you take your trade from here. Are we together? The same applies to a downtrend. If the market is making lower lows and lower highs, I will advise that you wait for this pullback to end, right? And then you take this trade. Or you wait for the market to make another pullback. If it made a breakout like this, wait for the pullback to end. Then you take your trade from here. Are we together? It's the same thing. This is in an uptrend. The market made this high. But then when it makes this low here, that's when you're interested in taking the trade upwards. You continue with the direction of the price. Are we together? Do not counter trend it. Counter trending, we're going to be looking at it. But if you want to trade pullbacks without any pressure, or without having false breakouts, without being caught offside by the market, or even having fake outs, make sure you wait for the pullback to end. That's why we said we're going to be looking at how do we determine that a pullback has ended. Are we together? So I would advise that you stick to this. Wait for the pullback to end, then you can take your trade. We're going to be looking at how do we know it has ended. Are we together? So now, how do we know a pullback has ended? Now, there are some aspects that you are supposed to look out for that will determine or tell you that a pullback has ended, or it will give you an indication that a pullback has ended. And the first one is support and resistance, or what one can just look at as the previous turning points. For example, if the market is going up, creates this high, comes down, goes up. We clearly know that in an uptrend, the market is making highs, lows, higher highs, and higher lows. Now, here we have just created a higher high. Automatically, we know that if the market creates a higher high, we expect a higher low. So this previous turning point here is going to be your area of interest, or your area of value, whereby you're going to be waiting for the price to come to. So you will wait for the price to come back into this area, and then you will start observing how price is acting here. Loss of momentum, we've looked at that. We have a whole video on it. So you start looking at how is the momentum as price approaches this area here. Are we together? This is a previous turning point. Originally, it was a resistance. But now when the market broke above it, by definition of support, it automatically became support. Once resistance is broken, it becomes support. So this is the first way how we determine that a pullback is coming to an end, and this will be our area of looking for another buy to make a new high, right? This is the first way how you can determine that the market or the pullback is coming to an end, right? Now, the second one is trend lines. Now, it can be either a support trend line or it can be a resistance trend line. For example, if the market, remember we have rules of how to draw trend lines. We have a video on trend lines. You need 2 or more touches. So let's say this is your first touch. The market goes up, comes back down, makes the second touch, then goes up. Then we expect that when it comes again to this third point here to touch it for the third time, we expect that price will bounce because this will be another touch on this same trend line. The same applies when price is going down. If price comes, makes a first touch, then comes down, makes another touch, comes down, then when it comes back here, we expect that it will also react depending on how price approaches here. Do not just take trades because it has approached. This is the first touch, second touch, third touch. Do not just take trades because the price has approached the trend line or it has approached your previous support and resistance. Observe how price is reacting to this area here. Observe how price is reacting as it approaches this area of value. Now, this is what we call area of value or area of interest. Why? Because it's the point where we expect the pullback to stop, and then we start looking for our trades to continue with the trend. This is a trend that is going upwards. This is a trend that is going downwards. I already mentioned it before that you should always follow the trend, follow the direction of the price, right? So this is the second way you can know that a pullback has come to an end. Now, what is the third way that you can use to know that a pullback has come to an end is the Fibonacci retracement levels. For example, if the market is creating higher highs, higher lows, and then the market prints an impulsive move. Remember, in a normal market, the market is making significant, at least normal distances, higher high, higher low, higher high, higher low, higher high. The market is not so aggressive, or it's making lower lows, lower highs, lower lows, lower highs, not so aggressive. But the moment the market prints an aggressive push up like this one, creates this high, creates a low, this is a high, this is a low, then creates an impulsive move. By impulse, I mean that the market is making bullish candles continuously without breathers, without retracement. Now, in this case, you're going to use a tool we call Fibonacci retracement level. We shall look at it practical on the chart. So here you will draw your fib from down here up to here. Then we have also a video on it. After this video, you can go and look at that topic comprehensively. But of course, we shall also see how we can use it. Now, then the Fibonacci retracement tool has levels whereby we expect the market to retrace to. We have 38, we have 50, we have 61, which is the golden ratio. So we expect price to come back to one of these levels, right? So this is also another way that you can tell that the pullback has come back. Now, another trick of making sure that you're accurate with the Fibonacci retracement tool is if these levels are aligning with a structure like a trend line, a structure like previous support and resistance, or even if it's aligning with the moving average. Some of you trade using moving averages. So this is the third way you can know that a pullback has come to an end, right? So which one is the fourth aspect that one can use to know that a pullback has come to an end is what we call the moving average. Now, we are price action traders, though you can bring in some aspects for confluence, not to use it for analysis or to take trades. It's just for confluence. You can use the EMA 50, or you can use the EMA 200. We have spoken about the EMAs. We have a full video on it. Just look through our videos. You'll see it there. Now, these EMAs can help you as confluence. After you're doing your technical analysis using just price movements and structures, you can use the moving average just as confluence. For example, if price makes a high, makes a low, then makes a high, right? Now, if the moving average is also passing through here, already you have this turning point here, and you expect the market made this high, low, high, and you expect the market to come to this area here. Now, if also this moving average, it can be EMA 200, please use EMA. EMA in full is exponential moving average. We do advise use EMA. We've explained all the reasons in the other video of the EMA. Make sure you look for it and you watch it. So make sure it's EMA either 50 or 200. You can choose any of your choice. Now, this EMA, if by luck or fortunately, it is also in the same place here, it's giving you this, it's giving you more confidence in this area. Why? Because when price comes back, it will be meeting two aspects at the same time. It will be meeting this moving average here, either it's 50 or 200, it will be meeting it, and then he in this case is acting as support. So if this moving average is acting as support, and also this previous resistance is acting as support, and they're meeting at this junction here, and price comes back here, this is a very good indication that this is a very strong possible turning point for this price here, whereby the pullback could actually end. Are we together? So these are the 4 aspects that you can consider to know that this pullback, or a given pullback, has come to an end, whether it's trending upwards or it's trending downwards, right? So you can use these independently, or you can also use them together as confluences. Let me give an example of how you can use these as confluences when you're trading. For example, if the market is making higher highs, higher lows, higher highs, higher lows, higher highs, right? You can clearly see that the market is making highs and lows. Now, here we have this area of previous resistance. We have this previous resistance here. But also, if you have your trend line, let's say this is the first turning point, second turning point, and you draw your trend line like this, and it does align properly with this area here. This will be, when price comes back and reacts to this level and gives us an entry, this is the point we shall be looking for all the price actions to take this trade. Why? It's giving us a proper confluence, because you have this trend line, right? You have this trend line here, and you have this previous resistance, which is now support. Are we together? So this is how you can use them as confluence, more than one. In this case, you're using your support and resistance, previous resistance becoming support, and also you're using your trend line. Alternatively, also, how can you bring in the fib and support and resistance? I've already given an example of using the support and resistance and the moving average. Now, how can you bring in the fib? Also, if the market has made a higher high, higher low, then the market gives an impulsive move, right? A very significant push up, and you can grow your fib level. Now, if this previous turning point is aligning with aligning with the fib level, one of the fib levels can be either 38 or 50 or 61, right? As we're going to look at all this on the chart, this can be a very proper confluence that you can use. Now, the best trades are always those ones that have confluences, but I'm not saying that you cannot use them independently. You can use them independently, as I mentioned, or you can use them as confluences. Now, the best ones are those that are having more than one. Imagine a moving average aligning properly with your support and resistance, or your trend line aligning properly with your support and resistance. At the same time, also a fib level is at that same point. It means that that area is a very strong junction. Are we together? So that is how you know that a pullback has come to an end. Now, let's look at how can you actually trade these pullbacks. We've already put them together, but let's just go through them over again, right? Now, the first thing you're going to be looking at is the area of interest. For example, if the market is going down, it made the low, made the high, and then broke down here. It broke this point. This was a support previously, right? A previous low. Now, this is the area that we're interested in. We're saying that first identify the area of interest, this one here, or the area of value. First identify the area of interest or the area of value. After identifying it, now we have identified it as this area here. We want price to come back to this area before we can take our trade. Now we're a place of interest or a place of value is an area by you're looking at taking your trade. It's just like a hunter. A hunter is going to put a trap for an animal, right? Now, that trap is placed at a specific point. Now, it's the same as in trading here. That specific point that you want to take a trade at is what we're calling a place or an area of interest or value. First, identify it. And then secondly, attach a confluence to it. Like I've just mentioned a few seconds ago, that the best trades are those ones that have confluence. For example, here, if you have a confluence as a trend line, this can be your confluence. This can be a trend line, or it can also be a moving average, right? If a moving average, if this is the moving average that is acting as your confluence, it's okay. Always look for a confluence in that area. The best trades that are not going to fake you out, that are not going to give you a very high risk compared to your reward, are those trades or those setups that are giving you a confluence in that particular area. Then thirdly, you're going to look for candlestick patterns. You want rejections. You want loss of momentum in this area here. You want confirmations to happen before you can take the trade. These are the 3 steps of how you can take the trade when you want to trade using the pullback method. First, identify the area of interest or value. Second, you can attach a confluence factor to it. Confluence factors are spoken about Fibonacci, we have spoken about the moving average, we've spoken about the trend line, or even the previous resistance turning into support, or previous support turning into resistance. After that, then look at the candlestick confirmations, candlestick patterns that are forming. Are they shrinking? When they're shrinking, it shows that there's loss of momentum while approaching that area. Then that's a first tick. Then secondly, is there a rejection? Is there a confirmation that you look out for? Then you can say that I am taking this trade, right? So all this is theory. I would like us to go to the charts and we do everything that we've spoken here theoretically. Okay, so we're just on our chart here. I'm using TradingView for the purpose of this video. So let's try to implement whatever we have spoken about in theory. We said one, identify the area of value. You can find a confluence, and then also want the price to come back that area of value, and then we can be able to take our trade depending on how price approaches that level using the candlestick behavior, right? So looking at this chart here, let's start from here. We have an important level here, which is acting as a very, very strong level of support. So now we want to see, is the market going to continue down with it? Because the market has been breaking lower low, lower high, lower low, lower high, lower low, lower high. So we are back to this point here. So if the market can break below, we want the market to come back here, and then this will be our area of value. Remember, we're trading pullbacks. So we advise that the market should first do this pullback. If the market can give us this pullback, whether it can go down or it can stop here and then gives us this pullback. After the pullback is what we're interested in to take the trade, right? So this area here will be our area of value, but as we stand right now, it's not yet an area of value. So let's want the price to first break below. Then when it comes back after that pullback, or what we call retracement, and then we can be able to trade it, right? So let's see what the price does. So we have our break. Let's see if the market can come back. It's still not yet back, right? Still not yet back. Okay, so here the price creates double bottom. So also this one gives us an area of value here like this. I'll just mark it because we can use it also as our target, right? So let's wait. We're waiting for the price to come back here. If you want, you can trade this retracement back here, but just like I advised when we're starting the video, please do not trade it unless you have enough experience, right? It can be profitable, but wait for the market to first finish the pullback. Then you can take your trade with the continuation of the trend. Because right, we clearly know that the market is now making lower lows, lower highs, lower lows. Now we're retesting this previous low high, and then we can take the trade downwards. Are we together? So let's wait for the market to reach that area, and then shows us rejection when it reaches there, right? So this is the first time the market touches this area. Let me just increase the size for it so that we can be able to see it properly. So this is the first time we touch this area, and the price is reacting to it. So it has shown us a rejection, but it's not yet enough. We want to see a proper rejection of that area. Now, this is the point whereby we're interested, because the market first showed that buyers were not continuing with their pressure up. And also, you can clearly see that their energy reduced. They had a strong energy here, reduced energy, tried to push, but you can clearly see they're exhausted by this pattern here that they're trying to create, right? So with this formation of this candle here, this rejecting candle here, we can now decide to go and take our trade. Now, remember I said you can trade them independently, or you can add in a confluence of a Fibonacci retracement level, a trend line, or a moving average. So for this first example, let's try to use it independently without any confluence. So let's go to our entry time frame, which is H1, and then we try to take this trade, right? So let me just reduce this. So we are going to take our trade after the market breaks below this area here, which it has already done. It has already broken below the area. So when we do come back here, then we are going to be able to take our trade. So let's see if the market goes back to that area. Then we can take our entry. Okay, to continue down, but we're interested in it coming back here. Please always be strict with your rules. We want the market to come back to this broken area because there's an M here. Push down, it's not tested. So we want the price to come back here, and then we can be able to take our trade, right? So this is the first time the price came back here, and this is our entry here. This is our entry here when price came back here, and then your stop loss is going to be just above this rejection here to show that the buyers were rejected strongly from this point. So your stop loss is just going to be above. Now, where is going to be your take profit? Oh, sorry. I did set badly. This is not. This is like this. it's a sell. So our stop loss is just going to be above here. Now our take profit, your first take profit is going to be this low here that the market created. This low here that the market went up with, right? In daily. Let me just go back to daily and I show you briefly. So your first target is going to be this point that gave us a push up. We have a video that shows you how to properly mark lower lows and lower highs. So your first target is going to be this, and then your second target is going to be this move plus 15% of it down, right? So if you want to take 2 trades, if you want to take only 1 trade, this is going to be your target just here, this low that gave us a push up. So I'm just going to measure this distance, and it's 5 point. So I want 7.5 around here. This will be your second target, will have to be around here. So we shall again take the second trade. We're going to take the second trade, and the target will be down here, right? So this is our first trade, this is our second trade. Now I'll just delete this. Let me first reduce this. Okay. So I'll delete that. Now this is our second trade is this. Now let's just go back to our entry time frame so that we can be able to see how the trade played out. This is the second target. This is the first target, this one here. And then the second target is just this one that is overlapping to make a new low, right? So let me just increase because the trade is going to be a swing, right? Trade is going to be a swing, so let me just adjust. Okay, so we have already set our targets. Let's clearly see how the market is going to play out. Please always adjust your trades to minimally 1 to 3. The stop loss is going to be the same above that area. 1 to 3. Now in this case, we're having 1 to 9 and 1 to 6. 1 to 9 and 1 to 6. So let's just see how the market is going to play out. We do not know what is going to happen, whether we hit stop loss or we hit take profit. It is okay, we've already done our analysis. Do not keep changing what you've already said, right? So it has reached our entry area. We're not using confluence, we're just trading a pullback. After this pullback is done, it has changed trend already. So we have taken our trade. Let's see how it plays, right? So it's moving nicely. We have a drawdown. Then we saw some bit of profits. So let's see if we shall hit the 2 targets or stop loss, or we shall hit 1 target. We don't know yet. Let's just see what the price will give us, or the market will give us, right? So those who do intraday, you can have smaller targets, maybe of 1 to 3, or you can also refine to smaller time frames like minute 15, minute 30, like that, right? So let me just adjust this because it's kind of taking long. It's kind of taking long. So I was saying that you can also have your targets. You can trade using smaller time frames, or to refine them using minute 15, minute 30, or even you can go to minute 5. Some of you like using those smaller time frames. But as swingers, do not go below H1, please, because this trade took a number of days to reach even this low here, right? So let's see if we hit our target. So we did hit both the targets, right? We did hit, this was the second target, and this was our first target. We hit both the take profits. Now let's go back to our daily time frame where we got our structure that we're trading from, and then we observe exactly what the price is doing again. Then we can see if we can take another opportunity. So again, you can clearly see the market has broken down. It has broken below, right? It has again broken below one of our key areas. Now it's again retesting this area here, right? So on this retest here, we can again take a new trade if you want, right? So, but we're not interested. Let's just see what the market does after retesting this area. You're again going to see that after this retest here, we're again going to go down. But again, also we have created this new low here, right? Now, when the market breaks below here and on a retest, we can again take our trade. Are we together? So this is the current price of gold. This is the current price of gold. Actually, you can use this as a setup if you want. So we shall just need the market to give us a retracement in this area here, because also we have double tops, or we have the market giving us a channel bit. So when the market gives us a retracement there, you can just go to your entry time frame and then you look for the trade continuing downwards, right? Your first target is always going to be the first turning point here. For example, if the market turns from here, or if it's to first continue down, but the first turning point that the market gives you before going up is what you use. Now let's just go back a bit in time. Let's just go back a bit in time. Let's assume that you wanted to take this trade here. You could also have a number of confluences. If you're to go just slightly to this first trade here that we took, the first two trades that we took, you can clearly see that we have also a trend line that can be given to us. We have this trend line that can give you a confluence of this trade here. Let's say someone wanted to take this trade here, which we did not take, this one here, because we have, let me just adjust this. The rules of drawing a trend line, you have to have at least 2 or more turning points or touch points. So these are the touch points that we do have. So we have one touch point, second touch point, we had a false breakout here. Now, the rule of a false breakout is whenever we have a false breakout, we need the market to come back and retest that part of the false breakout. You can clearly see this is a clean touch, a good touch. Then here on the third touch, we had a false breakout. Now we had to come back and retest it, right? Since we didn't test it here, instead we had the false breakout. So when the market touch this trend line here, you can easily take your trade as a confluence. So you're having this support here, which has now become resistance in this case. So you're having a confluence of a resistance in this area here, and also you're having a confluence of this trend line here. So if you take your trade, this is going to be a very, very strong trade, and you can clearly see the market did push down aggressively, right? So that is how we do trade pullbacks. With ease. You can use it independently if the level is so strong. For example, you're getting your level like this we have done here. You're getting your level in daily, and then you're taking your trade in H1. But if you want to have a very, very better and strong foundation for the trade, you need to at least identify those ones with confluences, right? For this example, we used one that is independent because this level was strong, and you can clearly see the break that we had. So on the retest here, we expected at least the market to come back here, or at least to give us a new low, which the market did both of them. Now, for this case, you had the chance to use the confluence. Though we didn't take this trade, just for the purpose of making the video short, but I've explained to you how you deal with it. So that is it for this video. If you found value in it, do not forget to click the likes button so that many people come across it. And also, if it's your first time watching any of our videos, particularly this one here, make sure you click the subscribe button because we do such content every week. Have a great day.